All right, let's dive into one of the biggest, most interesting names in the entire fintech space, Adyen. It's an absolute powerhouse in digital payments, no doubt, but its stock has been on such a wild ride lately that it has everyone asking the same thing. Is this a truly revolutionary company you should bet on, or is it just an overvalued gamble?
To really get a sense of the drama, you just have to look at this one number, 40%. That's how much Adyen stock plunged in August 2023. I mean, we're talking about a drop of nearly half its value in just a matter of days. That sent a massive shockwave through the whole industry.
And that huge collapse really brings us to the core question here. What is actually going on with this company? Is this fintech champion genuinely on the ropes? Is the market seeing some fundamental cracks in the business? Or was this just a huge, massive overreaction? We're going to look at the fundamentals, the competition, and figure out what it all means.
And when we say wild ride, we are not kidding. After its IPO back in 2018, the stock just went on an absolute tear, peaking at almost 2,700 euros a share. And then, bam, the crash in August 2023. But then it started to climb back up. It's this kind of insane volatility that makes you realize, okay, we have to understand the business underneath it all.
So before we get into the whole debate about whether it's a good investment, let's just break down what Adyen actually does, because behind that crazy stock chart is a seriously powerful business model.
The key idea here is something they call unified commerce. And honestly, this is Adyen's secret sauce. Think about a giant company like H&M or McDonald's. They have websites, physical stores, mobile apps. That's usually a total mess of different payment systems. Adyen provides one single platform to handle it all. It takes away all that complexity.
And who's using this platform? Oh, just a who's who of global giants. We're talking Meta, Uber, Microsoft, Spotify. The list is just incredible. So this isn't some startup for small businesses. Adyen is the engine running behind the scenes for some of the biggest, most demanding companies on the entire planet.
Their strategy for growth is pretty clever too. It's called land and expand. So they get their foot in the door with a huge client, maybe just doing basic payment processing. But once they're in, they start to expand by offering more services, risk management, new payment methods, the whole shebang. So they don't just find new customers, they grow with their existing ones.
Okay, so that all sounds pretty great. So why are so many investors still incredibly bullish on Adyen, even after that massive drop? Let's take a look at the argument for being optimistic.
First off, the growth story is far from over. I mean, projections show solid net revenue growth, but the real story is in these key areas. Unified commerce is expected to grow by 30%, and their platform services are projected to surge by a whopping 60%. That tells you the core business is still absolutely firing on all cylinders.
And get this, all that growth is incredibly profitable. An EBITDA margin of 51% is phenomenal. It basically means for every dollar of revenue they bring in, over half of it is profit before all the other accounting stuff. It's like a money printing machine that just gets more efficient as it grows. And it gets even better. That profit isn't just a number on a spreadsheet, it's real cash. A free cash flow conversion rate of 87% is just wow. It means the vast majority of their earnings become cold, hard cash in the bank. That's a huge sign of serious financial strength.
The bull case isn't just about the money, it's about the tech. Adyen's platform was built from scratch as one single system. They didn't just buy a bunch of other companies and try to tape them all together. This clean, proprietary tech, which uses AI to boost success rates for their customers, is their real competitive advantage.
But of course, that's only half the story. Now we have to flip the coin and look at the other side. No company is perfect, and for Adyen, the reasons to be cautious are just as compelling.
First and foremost, Adyen is not operating in a vacuum. It's a battlefield out there. You've got titans of the industry like Stripe, which is a powerhouse with startups, and of course PayPal, a household name with a huge network. This is not an easy market to dominate.
And that brings us to the really crucial point for the bears, the valuation. A price-to-earnings ratio over 46 is steep. To put that into perspective, the average for a big company is usually somewhere in the mid-teens. A number this high means the market is pricing in years and years of perfect growth, leaving absolutely no room for error.
And speaking of errors, there are some signs of trouble. The company itself had to lower its own growth guidance to the low 20s. They're pointing to things like US tariffs and the overall economy. Now, for a stock that's priced for perfection, any sign of slowing growth is a major, major red flag.
And it's not just us saying it. This quote from analysts at Jefferies really illustrates the concern.
They're basically saying that Wall Street might be way too optimistic about the future, especially when things are so uncertain. And when the pros start sounding the alarm, it's worth paying attention.
So, you've got this powerful growth engine on one side and a hyper-competitive, super high-priced reality on the other. How do we weigh these pros and cons to come to some kind of verdict? And this right here really lays out the whole debate perfectly. The bull case on the left, you've got strong growth, incredible clients, amazing tech, and tons of cash. But the bear case on the right is just as powerful. Fierce competition, an eye-watering valuation, slowing growth, and all kinds of outside risks. This is the core tension for anyone looking at Adyen.
So here's our conclusion. Adyen is without a doubt a premium company. The technology is top tier, the business is incredibly efficient. But investing in it comes with premium risks. You are paying a very, very high price that assumes near-perfect execution in a really tough market.
And that really leaves us with the final critical question that you have to consider. In today's world, is having a best-in-class, flawless platform enough to justify paying that premium price? Especially when you have formidable competitors fighting for every single transaction. That is the calculated bet an investor in Adyen has to make.